Hello, everyone. Welcome to your June 2025 quarterly market update. Over the next sort of 5 or 10 minutes, I'm going to walk you through the June quarter and year-end figures for the Vanguard High Growth Fund. We'll touch a little bit about around what happened over the last quarter, have a look at some earnings, growth figures, and some interest rate data. So overall, the June quarter was a very strong and positive quarter for global stock markets. We saw confidence rebound as the Trump administration tariffs threats made in early April were progressively wound back. Combine this with strong earnings and sales from the world's largest companies provided a really good backdrop and overall for global markets. And as the quarter wore on, expectations around the big beautiful bill that looks to add $3 trillion to US deficits over the next 10 years, the main takeaway is that the US tax cuts put in place by the Trump administration's first term will remain in place. So it's a positive for global growth. We, of course, unfortunately saw some geopolitical uncertainty in the Middle East. That, along with some further policy uncertainty we just discussed around tariffs, absolutely remains. Hence, it's important to remain comfortable with being uncomfortable as we move forward. Overall, the underlying picture looks really strong, and there are, however, headlines that are potentially likely to create more volatility. But we think with the patient investor, that policy uncertainty outlined and around tariffs and geopoliticals as such really provides opportunities for the patient long-term investor. Now, in terms of looking at performance, so again, we're looking at the Vanguard High Growth Fund, which is a really good proxy for global share markets, with 90% of this portfolio allocated to stocks and businesses. Noting that over the June quarter, this portfolio was up 7.7%. and rounds out a really strong year of circa 14 to 15% for the year. And what it tells us is the stock market is climbing a wall of worry over the past 12 months and outperforming the long-term average, which you can see sits closer to 9% long-term. A bit of a breakdown. So the S&P 500 was up 10.5%. The Euro Stoxx 50 up 1.5%. The FTSE over in London was up positive 2.8%, and the ASX 200 locally up 8.6%. The top holdings, this is one of my favorite graphs because it just helps us connect with what is owned in these broad-based funds such as the Vanguard High Growth Fund or other. And you can see that these are the top companies of the world. So things that we know and use every day: Apple, Microsoft, Combank, Coles, these types of businesses, the biggest and strongest make that up. Now, as mentioned previously, sales and earnings remained really strong. If we look forward toward the world's largest economies, we're expecting, per this graph, sales growth of roughly 5% and earnings growth of up to 10%, which is a really good backdrop for global growth and stock markets overall. And a little bit on interest rates. The RBA over the year did move rates down twice following moves from most global economies. And we typically see this as a positive for mortgage and property holders, but also for equities and bond markets. The RBA lowered rates again in February, but kept things still recently at the start of July. Where are rates going? So from the RBA's best guess, according to the May 25 statement on monetary policy, is that the neutral level for rates should sit around 2.7. Currently, it's at about 3.85. And this implies further rate cuts to come, approximately 3 to 4 more cuts. But the million-dollar question there is when. And just something around what has worked well for investors previously. What we've seen is an increased period of heightened volatility, and as such, just to summarize, what we have on the left-hand side of this slide is something called the VIX index, and this measures on the Australian share markets how wild the swings are. And what we can see over this period is through that April period around this Trump administration tariff announcements, the VIX index was measuring at 52, which is as high as I have seen it over a number of years. And the average for the years is sitting around 15 times, which usually sits significantly lower than this. So to me, we're seeing lots of ups and downs and a big spike there. But ultimately, this is really great for those brave enough to tune out the noise and go against that. As you can see on the right-hand side, we've got the ASX 200 and the S&P 500 measurements over that year with some big, strong returns. So what works really well is having a good, regular, automated savings plan, regularly entering money into the market at different intervals, and overall this is finding to be a really strong strategy to help navigate that volatility and capitalize from it. Thank you very much, everyone. Hope that was valuable. Any questions, just shout out to your advisor, myself or Marcus. Thanks. Chat soon. Bye.